different equations based upon which a few of numerical questions can be expected for your exams. So we'll work out a few numerical questions here, and there is one more chapter that is left. Hopefully we'll wind up with the economic analysis with today's class. Okay. So I'll give you the numerical examples or numerical questions which you can expect for your exams. We'll do the first one, and it's very important that you have to learn your equations. As long as you don't know the equations, it will be hard for you to find out the answers. So make sure you know the equations and then look forward to get the working of the question. First question is, capital receipts are given as 95 units. Revenue expenditure is given as 100 units. Interest payment is given as 10 units. Revenue receipts are given as 80. Capital expenditure is given as 110. Supposed to find fiscal deficit. Supposed to find out fiscal deficit. I put primary deficit along with the same question. So what was the equation to find out fiscal deficit? Fiscal deficit was equal to budget deficit plus all the borrowings and other liabilities of the government, which has been accumulated, kept on accumulating from the last many years. And here they haven't given budget deficit directly, so we have to find out budget deficit as well. Budget deficit, I told you, it is equal to total expenditure minus total revenue. Again, another limitation of this is they have not given total expenditure and total revenue on the receipt side individually. So it's our duty to find out them again. So total expenditure is equal to, we know there are two components of total expenditure, capital expenditure and revenue expenditure. So first find total expenditure as a summation of capital expenditure and revenue expenditure. Capital expenditure is 110 and revenue expenditure is 100. So 225 is your, no, 210 is your total expenditure. Total revenue, same procedure, capital receipts plus revenue receipts. Capital receipts is 95, revenue receipts is 80. So 175 is your revenue side. Therefore, budget deficit will be equal to 210 minus 175. 35 is your budget deficit. Fiscal deficit, I said budget deficit plus borrowings. Here they have not mentioned anything about borrowings, so we'll take borrowings as zeros, or borrowing and other liabilities of the government is going to be zero, as nothing has been mentioned about the same. So 35 plus 0. Budget deficit and fiscal deficit is going to remain the same for this context at 35. Primary deficit is equal to fiscal deficit minus the amount paid as interest. Fiscal deficit is 35 and interest payment is 10 units. So 25 is your primary deficit. This is clear. Can you go to a second question?
Ma'am, please wait.
Oh, yeah, I'm doing it on the next slide. The second question is, you are supposed to find out effective revenue deficit percentage. Here, it's simple one because they have just given you the percentage, but at times they may give you GDP and they may ask you the percentage, right? You may have to calculate what percentage in its amount form. For example, GDP will be given as 10 lakh rupees or 1 crore rupee, and of that, what percentage is going to be the effective revenue deficit may be sometimes a question. But this question is kindly a little bit direct. What was effective revenue deficit? Effective revenue deficit is equal to revenue deficit minus all the grants that are given for capital assets, right? Capital formation. So here revenue deficit is given as a percentage in terms of 3, and the grant that has been given is 1.8. So 1.2 percentage of GDP is your effective revenue deficit. See, there is a distinction over here, another component, which is non-plan expenditure. Actually, this is not in use much these days because we have forgone the usage of 5-year plans. Hope you remember what 5-year plans were. Until 2017, we had what was known as 5-year plans, and a good amount of budget was kept aside for fulfilling the requirements of the 5-year plans. So at that time, we had a budget that was divided into plan expenditure and non-plan expenditure. But now they have combined those ideas of keeping planned and non-planned together. And we have the common classification, which I had explained to you like the last class. So we don't have a specification like plan expenditure and non-plan expenditure, but still government in budget keep aside a little amount for non-plan expenditure alone, just to meet emergencies in case of, for example, any contingencies situation comes around in the form of natural calamity or in case of some serious financial crisis. So a certain amount of money will be kept aside for non-plan expenditure. Okay, it's not that important. Keep in your mind that these deficits are important because deficits are going to give an idea of how an economy has to decide about raising their income if their expenditure is too short when compared to that of their requirements. Can I do one more question over here? Third question. Revenue expenditure is given as 70,000. Borrowings of the government is 15. Revenue receipts 50,000. Interest payment 25% of a revenue deficit. Calculate primary deficit. Okay, calculate primary deficit is a question. Can you find revenue deficit first? Because interest payment, they have given like 25% of revenue deficit. So it's necessary to find out revenue deficit, right? So revenue deficit, we have already seen it is a difference between revenue expenditure and revenue receipts. 70,000 being the revenue expenditure and 50,000 being your, this is your revenue deficit. And interest is 25% of it. So 20,000 into 25%, which is equal to 5,000. Okay. And you have to calculate the, fiscal deficit. Fiscal deficit is budget deficit plus borrowings. And they have not given, in this question, they have not given anything regarding budget deficit. You cannot take revenue expenditure and revenue receipts only as the source of expenditure and revenue of the government, because capital is also a part of it. So we take budget deficit. Usually budget deficit is considered as zero. I told you in normal accounting sense, budget deficit is generally treated as zero, plus borrowings has been given highlighted as 15,000. So your fiscal deficit is 15,000. Primary deficit is equal to fiscal deficit minus the interest payment. So 15,000 minus 5,000, which is equal to 10,000. Yeah, your primary deficit is equal to 10,000. So is this clear? I've completed the fiscal policy, which is generally related to the budget component. So when government is in lack of money, or they are finding some certain financial crisis, or they are experiencing financial difficulty, they will try to bring down the expenses and increase the receipt side or the revenue side. That is during the recession period, or at the time of, in order to absorb more money from the economy. That is when they are applying contractionary fiscal policy, expenditure will be cut down and revenue side will be increased. But when the government is looking forward to apply expansionary fiscal policy, they will increase the expenditure and cut down the receipt side. So during pandemics or any kind of those crisis situation, policy that will be adopted will be expansionary policy. At the same time, if they're looking forward to have inflation in the economy, or there is a huge amount of inflation that is going on in the economy, then the most appropriate policy will be to apply contractionary policies, where they will cut down the expenditure and increase the receipt side or revenue side. Okay, so can I clear the board? Last chapter that which we are going to learn is about the GDP concept, or we can say national income in general, but we are having different amount of different aggregates which will help us reach national income. So the title of the chapter is GDP and related aggregates, but it's more related to national income. So income earned by a nation from all its sources is known as the national income. Here we can say it is the money value. The classic definition of national income is money value of all final goods and services produced by an economy in one financial year. Okay. So whatever goods and services an economy is producing in one financial year, its final value or its money value is considered to find out the income generated by an economy. But here you have to see that a nation is a very wide term. There are very much different aspects when you consider nation in general. So you have a domestic concept and a national concept when we are coming down to national income. See, this is very similar to that of preparation of balance sheet. You cannot prepare balance sheet on the first hand when you get all your accounting details, right? All accounting transactions. You have to prepare some petty accounts before preparing balance sheet. So those petty accounts which will help you reach national income are the small aggregates like GDP, GNP, NDP, and NNP. So there are four aggregates. I hope you will be familiar with your full forms. Gross domestic product is GDP. Same definition, money value of all goods and services. But one difference is produced by an economy domestically. Okay, domestic is something that happens within the four boundaries of our country. Domestic is something that is happening within the four boundaries of our country. When we take it outside, that is when we are having certain activities that are taking place even outside our economy, it becomes national. You can say there will be a lot of enterprises and other citizens of our country who are working abroad. They are actually supposed to work abroad, make money, and it is expected to come to our country in the form of remittances, profit, etc. That comes under the national concept. There will be embassies, consulates, or business enterprises, or you are having all the aircrafts, the ships, etc., which makes money outside our country, but the money that is being spent, that is earned outside, will be brought back to our country in the form of remittances. So that is a national concept, but domestic is whatever is happening inside our country is domestic. So we cannot claim its ownership fully. Domestic is nothing. We cannot claim its ownership fully because there will be a lot of people who is inside our country, like coming from some other economy. For example, there will be foreigners, there will be multinational companies which are making money inside our country and sending the money to their home country. That is included under GDP. Okay. Now GNP, gross national product. See, there are like around 10 equations which you have to learn for finding out the numerical answers for the questions related to this chapter. But I'll help you. What I generally suggest is I'll help you to find out what is the difference between each concept, so that in future, if any question come with respect to this part, it will be easy for you to give the answers and find out the answer rather than just mugging up the equation. If something goes wrong and if you can't reproduce the equation properly, your entire answer is going to have a wrong value. So what is important over here is please learn the differences between the terms, and it will help you understand what the concept is and help you to give the correct answer, find out the correct answer. Okay, so we'll take two terms together, for example GDP and NDP, okay, on one hand, and on the other hand you can say GNP and NNP. So can you see that the difference here you can find out is in terms of G and N? These all other two terms like domestic product is same for the first part, national product is same for the second part, right? Gross domestic product and net domestic product, it's on one hand. The difference you can identify is in terms of gross and net here. Again, when I go for the second differences, national product is same, but gross and net is the difference which I can identify. So gross and net is a common difference which we speak all the time. Let it be salary, profit, investment, weight, anything. Gross and net is a common term which you can find out, or you can say with respect to its differences. Here, it is nothing but the depreciation. Gross and net differences, depreciation. Depreciation is nothing but the capital consumption allowance. Capital consumption allowance. What does this mean is, as and when you use capital for a long period of time, the value or the asset value of that capital is going to decline because of your usage. So that is known as capital consumption allowance. Gross includes depreciation and net excludes depreciation. See, for example, if you deduct depreciation from GDP, what should be your answer? You are deducting depreciation from GDP.
Net domestic product.
Yeah, you should reach NDP, right? Net domestic product. Same way, if you are adding depreciation to NNP, your value should be equal to GNP. I hope you got the idea. Gross includes depreciation. So when you deduct depreciation from gross, you will get its net concept. If it is domestic, you will get net domestic product. If it is national, you'll get net national product. At the same time, if you are adding depreciation to net concept, you will reach gross concept. Okay, gross concept of the same category, whether it be domestic or national. So this is the first difference which you can clearly identify. And second difference is, if I'm taking another two terms together, for example, GNP and GDP on one hand, and on the other hand, I'll say NNP and NDP, you can find out the middle term over here is different. National and domestic, here also national and domestic. The net and the product concept are the same. I told you national is something wider and bigger than the domestic. National is something over and above or beyond the four boundaries of our country. Domestic is something that is happening within the four boundaries of our country. It's a concept known as NFIA. NFIA stands for Net Factor Income from Abroad. Okay? Net factor income from abroad. It is a difference between inflow of money and outflow of money. Money that is coming to our country and money that is going out of our country is your NFIA. NFIA is, I told you, there will be people outside a country, our own people, our own business dealings and all outside our country, they will be making money and sending the money to our country. That is inflow. Outflow is people inside our country who are not belonging to our economy, making the money and sending it to their home country. Then it is an example for outflow of money. So this difference is known as NFIA. Okay. This NFIA can be either positive or negative. If it is positive, it means money is coming to our country at a greater extent than the money that is going out of our country. If NFIA turns out to be a negative value, it only means inflow is lesser when compared, outflow is greater. Okay, more money is going out of our country when we have NFIA as a negative value. So you can say GNP minus NFIA is going to give you GDP. Fine. At the same time, if I'm adding NFIA to domestic concept, I will get national concept of the same category. So are the two differences clear? One I expected, one is regarding the gross and net concept. The difference is identified as a depreciation. Gross involves depreciation and net excludes depreciation. Second difference is with respect to national and domestic. National includes NFI and domestic excludes NFI. Are the two differences clear? I'm clearing the board and moving on to the next one. See, each category, that is GDP, GNP, all the four aggregates of national income can again be classified into two categories. It's a little more confusing now. GDP, whatever it is, I'm giving the example of GDP now. GDP at market price, you denote it like this: GDP at MP, market price is MP. And the same concept can be again classified as factor cost. So you can say it as GDP at FC, factor cost. Okay. Now, what is this market price and factor cost is? When you are producing a goods and services, and its value when that commodity reaches, you don't have service anyway, when a commodity is reaching the market, what value it possesses is included under the market price. Okay, market price is something, the value of the commodity when it reaches the market is known as the market price. Factor cost is the value of the commodity during its time of production, or we can say before it's moving out of the factory gate. Fully produced commodity, and before it moves out of the factory gates, that commodity's value is known as factor cost. And the same commodity, when it reaches into the hands of the consumers, or when it reaches in the market, then it is known as the market price. Which one is expected to be bigger or higher in its value?
GDP at market price.
Yeah, market price,
Market
not
price.
particularly telling you GDP at market price. With respect to market price and factor cost, market price is going to be higher when compared to that of factor cost. Okay, market price is much higher than factor cost. Now, this is due to a term known as NIT. Market price minus factor cost is NIT. NIT is net indirect tax. What is net indirect taxes? You are adding indirect taxes with the commodities value, and at the same time government is giving some amount of financial assistance while you are producing some commodities in the form of subsidies. The difference between indirect tax and subsidies are net indirect tax. Okay, so if market price includes this net indirect tax and factor cost excludes net indirect tax. Okay, so you are taking market price of an aggregate, GDP at market price minus net indirect tax. This should help you reach GDP at factor cost. Okay, market price excluding NIT will help you reach factor cost of the same aggregate. GDP at market price minus NIT is not going to help you reach NDP or NNP, anything like that. Same concept, factor cost is being calculated if you deduct net indirect tax. NDP at factor cost, what should be done with net indirect tax so that I can reach NDP at market price? What should be the mathematical operation used here?
Place.
You have to add net indirect tax with factor cost so that you can help yourself reach market price of the same concept. Am I clear? So this is the way in which you have to find out the difference between the terms and try to come forward with your numerical calculations. And one more thing which is very important over here is when you're expressing NNP in terms of factor cost, This is always equal to national income. This is a theoretically proven thing. National income is nothing but when you're expressing something, expressing net national product in terms of factor cost, this is equal to national income. So if the question is asking for you to find out national income, it only means you are supposed to calculate NNP at factor cost. This is very important. You cannot find directly national income. It can be found out only with the help of net national product at factor cost. Is this clear? Can we start working on some numerical examples? And there are three methods. We'll first build the base, and after that, we'll see to it that we are supposed to find out the methods. It's generally questions are based upon the methods and not the just practical examples or the initial examples are asked. They'll be asking you how to calculate national income and find out the value of the national income or any other aggregates with the help of certain methods. Okay, but before going to the methods, it's better that we learn some basic question that will help you to find the answers easily. Okay, I'm giving you values, some random values, okay, that comes to my mind. 3,500 is your GDP at market price. Depreciation is given to you in terms of 500. NFI of this economy is 1,000. Indirect tax of this economy is 600 and subsidies that are provided in this economy is 400. You are supposed to find out the national income. Calculate national income. Okay, first one I'll help you do. GDP is given. Now find a term that is closely associated with GDP. You can either go to GNP or NDP. It's your wish. Final answer is going to remain the same. I thought of moving to NDP at market price. Now, what is the difference between GDP and NDP? What is the difference between NDP?
Minus depreciation.
Yeah, you have to deduct the depreciation from gross term so that you will get the net term. So 3,500 minus the depreciation. 3,000 is your NDP at market price. Okay. Now from there I can go to NNP at market price. So difference between NDP and NNP. What should be done with domestic to get it converted to national?
NFIA.
You have to add NFIA. So add NFIA 3,000 plus NFIA is 1,000, that and answer will be 4,000. From that, NNP at factor cost, which is nothing but the national income. Here, NNP at market price. If you deduct net indirect tax from market price, you will reach factor cost. So 4,000 is your market price. But here initially, in the question, they did not give you the net indirect tax directly. They have given you indirect tax and subsidies individually. So difference between these two, 600 minus 400, 200 is your net indirect tax, right? It's not given directly in the question. You are supposed to find out. So if you deduct that 200, your answer is 3,800 is your national income. This is your national income, 3,800 national income. Am I clear? You can either opt for learning these kind of equations. There are many 8 to 10 equations which you can, if you find that easier to mug up and to reproduce it where and whenever it is required. If that is okay with you, please go ahead with it. Otherwise, what I usually prefer is just try to identify the difference between the terminologies and help to find out the next one so that it's easy for you to reach the conclusion. Another question I'll just put over here. National income is given as 5,000. NFIA is negative 1,000 over here, okay? Depreciation is 250. Indirect tax is 500. Subsidies are given as 750. Calculate GDP at market price.
Ma'am, one doubt.
Yes, ma'am.
Ma'am, like we find GDP at MP and NDP at MP using factor cost and NIT. Can we find this NNP at FC and NNP at MP?
NNP at FC and NNP at MP?
Yes, ma'am.
I didn't get you.
Ma'am, we are finding this NIT using NIT GDP at MP and NDP at MP. No,
Yeah.
we can find this NNP also. The same equation using the same equation like NNP at FC equal to NNP at MP plus NIT.
Minus net indirect tax. This is the equation to find out a national income with the help of NNP.
Okay.
Okay. For example, the first question I can go like this as well. I'll put that over here. Instead of NDP at market price, finding out the value initially as NDP at market price, I can directly jump to GDP at factor cost. From GDP at market price, I can directly move to GDP at factor cost. How can that be done? GDP at market price minus net indirect tax is going to give me GDP at factor cost, right? So 3,500 minus 200 is GDP at factor cost. From there, can I go to NDP at factor cost? NDP at factor cost is GDP at factor cost minus depreciation, right? Depreciation, if you deduct depreciation from gross, you will get net. Depreciation is 500, so 2,800 is your NDP at factor cost. From there, can I go to NNP at factor cost? What is NNP at factor cost with respect to NDP at factor cost? You have to add NFIA. So 2,800 plus 1,000, you'll get the same answer. Whichever method you are, whichever direction you are using, you are going to get the same answer. It's not necessary they ask for national income all the time. They can go for asking you to find out NDP at factor cost, GDP at factor cost, any aggregate they can ask for. This is the answer for the first question, okay? First question itself, answer is... Okay, those who have done the those who have finished the first question, try doing the second one. Second question. National income is given. That means NNP at factor cost is given as 5,000. From there, you are supposed to find out GDP at market price. So I'll go to NNP at market price from factor cost. NNP at factor cost. You have to add net indirect tax to get NNP at market price. So here 5,000 plus, one thing you should be very careful here in this question is indirect tax is lesser when compared to that of subsidy. So NIT is going to be a negative value. It's equal to minus 250 because subsidy is smaller. I mean, subsidy is, the government is like very generous of giving subsidies, and indirect tax is lesser. So in this question, when you are adding net indirect tax, it should be negative. I hope the concept is clear. Market price is adding net indirect tax with factor cost to get market price, and here negative 250 because subsidies is greater when compared to that of indirect tax. So net indirect tax is going to be negative 250. From NNP at market price, I can go to GNP at market price. Okay. NNP at market price, add depreciation to get GNP. 4750 plus depreciation is 250. 5,000 is your GNP at market price. From there, you can go to GDP at market price, GNP at market price. National is a bigger concept. Domestic is a smaller concept. So you have to deduct NFIA. Deduct NFIA from national to get domestic. So 5,000 minus NFIA, be very careful. NFIA is negative. That means outflow is greater in this country than the inflow. So double negation of maths, minus 1,000. Am I clear with this one? Now we have to move on to the three methods of calculating national income. That is what is more important, but the basics are important so that the methods can be continued only if you know the basic, how to find out GDP, GNP and all. That is more important. Can I clear the board? Any doubts in this part?
1 minute, 2 minutes. They are not.
Ma'am, here after finding NNP at MP, I found that NDP at MP by deducting NFIA from NNP at MP.
Okay.
And then found after adding depreciation.
That's what I told you. You can approach any direction or any route can be taken. You'll get the same answer. You got the same answer as 6,000 only, right?
Yes, yes.
So answer will be always same. That is the positiveness of this calculation of national income. You can approach any method or any route can be taken, but final answer is going to remain the same. If you get two different answers, your calculation is wrong. Okay. Fine. So next one is we are going to the different methods of calculating national income, and the first method is known as a product method, or it is known as the value added method, product method or value added method. In this method, you are actually classifying the economy into three sectors. Every economy is divided into three sectors: primary sector, secondary sector, and tertiary sector. Okay. find out how much is their total production. What is the production of primary sector? What is the production of secondary sector? Find its value. For example, you're not supposed to say that primary is producing like 100 kgs of wheat, 1,000 liters of milk. It's not like that. Find out the value of it. What 100 kgs of wheat is equal to in terms of money, 1,000 liters of milk is equal to in money terms. Add all this, it gives you the total value of the production. Then find out the intermediate consumption of individual sector. Intermediate consumption means you are having some amount of the production that will be kept aside for future production or will be used as a raw material for next stage of production. So that kind of keeping aside or that kind of a value of certain commodity which is not actually brought into the market is known as intermediate consumption. Now find out the intermediate consumption of individual sector. It will be total intermediate consumption. Okay, when you deduct this total production and total intermediate consumption, you will have GDP at market price. Okay, the first stage is to find out GDP at market price. Okay, from GDP at market price, you can reach national income. So the first, the step of calculating any value in all the three methods is different. First stage is looking forward to give you the measurement or the classification of how to find out GDP at market price. Okay, so find what the production of each sector is, add up. It helps you to understand the total production of the economy. Find out the intermediate consumption of each sector, add them up. It's going to give you total intermediate consumption. Difference between these two is going to give you the GDP at market price. Okay, we'll do one question. Total production in primary sector is 3,500. Production in secondary sector is 2,500. Intermediate consumption of individual sectors. National income are to be calculated.
Ma'am, can you tell once again what is meant by intermediate consumption?
Intermediate consumption is that part of production which is kept aside for future consumption, future production. For example, especially when it comes to primary sector, you'll keep aside the output, right? Seeds and all, which will be used further for next stage of production, or it will be used for self-consumption. For example, I am a doctor who is providing service, but at the same providing service for a fees, but at the same time I'll be providing it for my own family members whose value cannot be taken into account.
Okay.
So that kind of consumption which happens or the part of the production which is not valued, which is kept aside for further production, is known as intermediate consumption. So you have to find out the national income in the stage in this question. And they are not going to give you what method you have to adopt. It is based upon the content or the component that is given to you, that you have to identify what method is suitable. Fine. So in this question, it's very clear that primary, secondary, and tertiary details are given. So the first method is to be adopted. First thing is you have to find out the total of production and total of intermediate consumption. 3, 5, 8. So total production is 9,000 and total intermediate consumption is 3,000. So difference between these two is going to give you GDP at market price. GDP at market price is 9,000 minus 3,000, which is equal to 6,000. From there, you can find out national income similar to that of what we have done in the last two questions.
And NPFC,
What's it? You have to find out NNP. Yeah, you have to find out net national product at factor cost. NNP at factor cost. That is national income. Yes, answer is 5,000. GDP at market price is obtained. I went to finding out NDP at market price, deducted depreciation so that I reached NDP at market price. From there, moved on to find out NNP at market price. You have to add NFIA, but here NFIA is negative. So the mathematical calculation helped me to deduct it. And then factor cost, again, net indirect tax is a negative value. Double negation of mathematical operation, then it becomes the 5,000 as the value. This is the first method of calculating national income. Product method or value added method.
Can you just repeat what is NFIA stands for?
NFIA is net factor income from abroad. If you have missed the initial portion, it's very important because that is where we have started the basics of calculating national income. So kindly go to the recorded version and find out net factor income from abroad is NFIA. What does this mean is it is a difference between whatever money that is coming to our country in form of remittances and all, profit and all, and at the same time whatever money is going out of our country in the same value, in terms of foreigners earning money in our country in the form of their profit, their income, they are taking it back to their home country. That is outflow of money. The difference between these two, inflow and outflow, is going to help you understand what NFI is. Okay. So I'm going on to the second method, which is income method. Clearing the board.
Madam, this method is product or you said again,
Product method or value added method.
okay.
Two different names for the same method, product method or value added method. Second method is income method, which is actually calculating national income from the payment that is received by the factors of production. We are having 4 factors of production: land, labor, capital, and organization. Whatever these factors are earning income in their respective form of remuneration, that is being added up, and national income is thus derived. Okay, income method is you are having what do we say it? Equation like this: compensation of employees plus operating surplus plus mixed income is going to give you NDP at factor cost. Please be careful when we are adding the components of income method. You are going to arrive at NDP at factor cost. Initially, the first method helped you to reach at GDP at market price, right?
Madam,
So
can
be
you
very.
please repeat the equation, ma'am?
I'll tell you. Please
Compensation.
wait. Yeah, please wait. Please wait. Here you are going to reach at NDP at factor cost. Don't take it mistakenly for GDP at market price. If that is your first problem or first calculation error, your entire answer is going to go wrong. So whatever components of income method are being added, it will help you reach only NDP at factor cost. That is the first difference between the first method and the second method. Now, what COE is? Compensation of employees. We all know the different what categories or different ingredients that comes under compensation of employee in the form of salary, wages. Then you have the perks, requirements, then allowances, bonuses. All these comes under the compensation of employee. Bonus, incentives, whatever, commissions, you are familiar about it. And the second one is operating surplus. Is very important. Operating surplus, it's divided into 2. Operating surplus is divided into 2. One is you can get income from your property. Okay, income from property as operating surplus. Second one is you can get income from entrepreneurship. You are running some business or entrepreneurship, anything from which you are earning some income. That is generally in the form of profit, right? Income from entrepreneurship is nothing but you are earning income in the form of profit. Now, this property income is divided into 3 again. You are having interest that is received. You might have kept your property in the form of some investment and you are earning interest out of it. Rent, definitely, if you are earning some property in the form of physical property in the land building form, you can earn interest. And other than that, if you are earning royalty, patent, copyright, etc., that also comes under the income from property category. At the same time, profit that is earned through entrepreneurship is also divided into 3 forms. One is profit gets divided as dividends. You will receive income in the form of dividends. That is, a firm has to give money in the form of dividends to its shareholders. You have to pay taxes, corporate taxes, and a part of it will be kept aside for further production, right? You have to expand your business activity, or you have to go for the second round of production. Then retained earnings in the sense part of the profit is kept aside for further production, that is known as retained profits or retained earnings. So these are the basic classification of the main components under income method. And you have the last one, which is mixed income. Mixed income is nothing but where you are in a position of earning something and you cannot include that in any of these which has been mentioned. For example, I'm already earning salary wages as a prime service provider, but apart from that, I'm having some hobby from which I'm earning some extra income. I cannot include under my salary. I cannot include that under my profit as well. But something which I'm earning over and above, like what I'm doing now, okay, that is included under mixed income. Mixed income is something which you are finding it difficult to distinguish it from, you cannot include that under compensation of employees, operating surplus. You keep it as mixed income. There is no bifurcation of mixed income, general category of mixed income alone. So when you're adding compensation of employees, operating surplus, and mixed income, it will help you reach NDP at factor cost. Okay, it will help you reach NDP at factor cost. Have you taken down this? Shall we start working on a question? Can I clear the board?
Madam, अच्छा mixed income हो गया.
MI is mixed income. Okay.
What does mixed income mean, ma'am?
When you cannot distinguish or when you cannot include any extra income in the first two category, you take that income and put that in mixed income category. Okay. Salary. I'm just giving random numbers so that's easy for calculation. Other name for depreciation has been already mentioned as capital consumption allowance. So instead of depreciation, if they give you capital consumption allowance, please take it as a proxy or a synonym for depreciation. Okay. NFIA is equal to minus 500 and NIT is equal to 1000. Calculate national income and GDP at market price. So as I mentioned earlier, they're not going to give you what method you have to adopt. See, all these components are very familiar to you now, and this components are going to help you understand that you have to apply the second method, right? You're having details regarding income in the form of salary, rent, interest, profit, and all is detailed over here. So method that is more appropriate is second method, income method. Okay, so here we'll first find out compensation of employees, which is salary plus commission. That is only given. No other compensation has been mentioned. And
Madam, commission of 100.
Okay, sorry, thank you. Second one is operating surplus. We have two categories over here. One is from the property, which is bifurcated into a rent as 1,000 and interest as 1,500, which is equal to 2,500 as your income from property. Second one, income from entrepreneurship, is in the form of profit, which is given as 3,000. Okay, mixed income is directly given as 1,500. So you can find out NDP at factor cost by adding all this value: 600, 2,500.
Dividend, Mr. Madam, dividend.
Ma'am, you have not added dividend and corporate tax.
Okay. Okay. Dividend and corporate tax. And I told you one more classification is there of profit, which is retained earnings. See, when they are giving you common heading of profit itself, then what is the necessary of adding these two components again? Did you get my point? Dividends and corporate taxes are included under the topic or under the common heading of profit. Profit is getting bifurcated as dividend, corporate tax, and retained earnings. At the same time, if they give you compensation of employees and give you the details of it in the form of salary, commission, bonus, allowances, and all, they gave you compensation of employees as 600 and they bifurcated it as salary and commission. Why should you add it again to the compensation of employees? Please be very careful. All these are trap that is being laid to you. Okay, so profit is already given as 3,000. Please don't go and add dividends and corporate tax along with the profit. Profit itself means it has been further classified into dividends and corporate tax. Am I clear to you now? Okay, so 5,500 and 600, it's 6,100. So NDP at factor cost is 6,100. Try finding out national income and GDP.
Madam, here we are not adding mixed.
Okay, thank you. 600, 2,500. Okay, thank you. We have to add mixed income also, which I missed. Okay. So it becomes 7,600. Okay, correct. NDPFC is 600 of compensation of employees. Operating surplus is 2,500 in the form of property and 3,000 in the form of profit and the mixed income. 1,500 mixed income. So NDP at factor cost is given. It's very easy for us to find out NNP at factor cost 7,600. You have to add NFIA with the domestic to make it national, and here NFIA is negative. So 7,100 is your national income. At the same time, you're supposed to find out GDP at market price. You have to go in the reverse direction. NDP at factor cost. From there, I can go and find out GDP at factor cost. 7,600. You have to add depreciation to get GDP at factor cost. Okay. And GDP at market prices. Adding net indirect tax. Net indirect tax is 1,000. So 9,100 is your GDP at market price. So two values have to be found out. One is in terms of national income and NP at factor cost. And second one is in terms of your market price with respect to GDP. Is the second method clear?
Madam, NNP at factor cost doesn't include NIT.
Why should I include NIT over there? Domestic and national difference, right? Domestic and national difference over here in terms of NDP at factor cost and NNP at factor cost. So you're supposed to add what? NFI. Domestic is smaller, national is bigger. So add NFI with domestic, get national. So NFI is negative. Instead of adding, I had to deduct it. Okay, can I go on to the last method? See, all the questions, PPTs are already shared. Just go through it. And there another additional PPT on Indian economy's latest statistical data has already been shared. And another additional questions around like 50 to 60, almost like 55 questions have been shared, which includes all numerical questions, then theoretical questions, direct, indirect, whatever kind of questions. 55 questions have been shared with the groups. Go through it. And along with that, we are providing Telegram services as well. It has started yesterday and the participation was very low. If you have not come to know about it, kindly start to participate there also. Like for the next 3 more days, 15 to 20 questions will be discussed. Mixed questions, which includes both the numerical case studies, all kinds of questions regarding economics will be discussed in the Telegram channel. So kindly make sure that you are participating in that too. And if you have any doubts regarding while you're going through your studies, please let me know. If you put that in the chat box, I'll be missing it because chat box in the sense your group, I'll be missing it. It would be better if you can send your queries personally to my WhatsApp number. Okay. The last method is expenditure method. So according to this method, we will classify economy into 4 sectors. First sector is the household. This is calculating, this method is calculating national income from the spending side. Okay, how far the economy is spending or how far expenditure is being incurred by individual economy. With that, we are going to find out what national income is. You cannot see, you cannot spend money more than what you have earned, right? So it's also useful for any economy to calculate its income from its spending point of view as well. So household is the first sector. Second sector is the business or the what do we say? Production sector. Third is the government sector. Fourth one is the foreign sector.
Ma'am, one doubt, ma'am.
Yes, ma'am.
Ma'am, what was the national income in the previous question, ma'am? Answer? Was it 7,100?
What is the answer I got? I lost it. Lost it. What was the answer? Okay, and then NDP at factor cost is given. Just a second, I'll do it again. NDP at factor cost is given. From there, you can find out NNP at factor cost. 4,100, you have to add NFIA. NFIA is equal to minus 500.
Madam, NDP at factor cost is missing mixed income, MI.
Yeah. So it was, what was it? Plus
7,600.
the previous one, right? Okay.
7,600.
7,600. 7,100 was the national income.
Yes, ma'am.
GDP?
I also.
9,100.
Okay, thank you. The problem with this board is like, can't redo. Okay, expenditure method, I told you we are having 4 sectors. One is the household sector, second one is the business sector. Then you have the government sector. If an economy is just having 3 sectors, it's known as a closed economy. For example, like North Korea and all, which is not depending upon any other foreign sector, or they are like self-reliant, not to a large extent, but to a quite good amount of values. They keep themselves as a closed economy. Then you are having a foreign sector. Most of the countries in today's world are opened up with the relationship with that of a foreign country. So it's a open economy, or foreign sector is added along with the 3 sector. Now we are having 4 sector economy. Now, what kind of expenditure do each sectors do? Household sector make their consumption as their expenditure. Business firms, common form of expenditure would be the investment. Government is doing, we have learned in detail what kind of expenditure they do, right? Public expenditure. Foreign sector expenditure generally happens when they are taking the difference of exports and imports, which is commonly known as net exports. Okay, net exports can be either negative or positive. If exports are greater, you have a positive net exports. If imports are greater, you will have the negative net exports. Okay, so consumption C, investment I, government sector expenditure G, and you write X minus N for the expenditure done by the foreign sector, net exports. And when you add all this, you will get GDP at market price. So again, first method and third method, when you are adding the components, you are going to get the GDP at market price. When you are approaching your national income calculation with the help of the second method, make sure you are reaching at NDP at factor cost. Fine. That is the basic differences between the 3 methods. And this is the most easiest method of finding out national income. Consumption done is 1,000. I'll give you one example. Investment by business firm, 1,500. Government expenditure, 1,500. Exports of this economy is 500. Imports are 1,000. Depreciation 500. Net indirect tax minus find national income is a question. Try it all by yourself. Okay, 4,000 is your national income. First, find GDP at market price by adding 1000, 1500, government expenditure as 1500 again. And be careful here, export is great, lesser when compared to that of imports. Your net export is going to be negative. Okay, so 3500 is your GDP at market price. I hope everybody is like working on their own methods. Or just copying down from the screen is not going to help you at any cost. And keeping the screenshot left.
GDP at market price 1000 is C, 1500 is I.
Yeah, investment. Government expenditure. Why negative 500 over here is imports and exports, net exports. If import is smaller, value is lesser when compared to that of, no, exports value is lesser than that of the imports value, you'll get a negative value, right? Always, it's beneficial for the economy to have more exports. So net exports can sometimes go negative if exports are falling short of imports.
MP at MP minus 500.
Because gross, from gross, you are we have to deduct depreciation to get net concept. So 500 is your depreciation. I deducted depreciation from gross to get the net concept. What should be done with the market price and factor cost conversion? Market price is 2600. National income is at the factor cost.
Plus N90.
Minus
Plus
net
N90.
direct tax.
Yeah, you have to deduct net indirect tax. Net indirect tax, market price is bigger. To make it smaller, you have to deduct, right? So it's negative 600. So 3200 is your answer. Am I clear with this?
Just wait. We are calculating.
I'm not erasing it. So the three methods, it's very important. It depends upon your luck whether they are going to ask numerical questions or not. But definitely you can expect at least one that are related to the calculation. For example, they'll give you the formula to find out GDP, and they may ask you what is to be done in order to get GNP or NNP. So something that is related to formula, at least you can expect, or a small question pertaining to it can be expected from this chapter. Usually a long question for 5 to 6 marks questions are generally asked in order to calculate national income from this chapter. Okay, it's usually been asked. You can easily score mark if you're particular with this, you're fine with this methods and all. And keep in your memory that they are not going to ask you the method. It's up to you to identify more the method that is appropriate with the help of the components that are given in the question. Okay. So with this, we have come to the end of our economic analysis. All chapters are important. We cannot just predict which chapter needs to get weightage. Make sure that you're going through it. Less than 1 week is available to you now. If you have doubts, you can definitely contact through WhatsApp. Anything regarding this part? Any doubts which I need to clarify?
Madam, NFIA full form once again, please.
Net factor income from abroad.
Okay.
Madam, kindly explain some summary of today class, madam.
Summary is nothing but we have learned what means we had discussed. What I gave you is details regarding national income, how to find the national income. Before moving to the calculation of national income, you have to see what are the different aggregates that helps you reach the national income. So the 4 aggregates are GDP, GNP, NDP, and NNP. So from there, you can reach national income. National income is nothing but when you are expressing NNP in terms of factor cost. NNP, when expressed in terms of factor cost, is theoretically proven to be equal to national income. So generally in our mindset that we have seen, we have kept GDP as a synonym to national income. But in economics term, GDP is not the synonym to national income. Theoretically, they are not the same. They are 2 different concepts. GDP only will help you reach national income. Why we are giving importance to GDP is that's only making you understand how business friendly an economy is. When an economy is helping you produce more goods and services, whether it be your own production or whether you are creating a business environment so that other people can come and establish their production centers in your economy, it's the same. It's going to help the economy in a large extent. Government can earn taxes. People can have wide variety of goods and services available in their home country. So such kind of benefits are seen if you try to encourage to increase your GDP. For your knowledge, for your information, national income is economically not equal to GDP. It is different because there are certain factors that helps you to convert GDP to national income, like depreciation, then the value of net indirect tax, NFIA, all these play very important role for conversion of GDP to national income.
Madam, one more question, madam.
Yes,
Kindly
sir.
tell me the GDP is higher or NNP is higher, madam?
That depends upon how your economy is having its NIT, NFIA, depreciation and all. We can never predict it's going to remain the same all the time. Sometimes GDP can be higher, sometimes national income can be higher. It depends upon how the economy is earning its NFIA. Is it constantly earning positive NFIA? Can you say every economy earns positive NFIA all the years? NFIA
No,
can
ma'am.
go negative,
No,
right?
ma'am. No,
Yeah,
no, yes.
NFIA can go negative. At the same time, sometimes government will give you good benefits in the form of subsidies, but at the same time, on a second round, they can ask higher indirect tax. It's going to affect your net indirect tax. Okay, so it depends upon economic situation. You cannot.
Ma'am, you told depreciation, other word will be there if in some.
Yeah,
portion.
depreciation is also known as capital consumption allowance. Capital consumption allowance is nothing but depreciation.
Madam, last one, madam. How to
Yes.
find the capital consumption in the question will ask capital consumption directly coming.
They will, yeah, because it's a tedious process of calculating depreciation. That is this is in the large context. No, sir. Indian economy is a very large context. So individual states will be providing the values to the central government to find out depreciation. So this will be directly given to you. Depreciation, you need not worry. At the most, they can bring about confusions regarding net indirect tax, NFIA and all. NFIA, instead of giving direct, they will be giving money remitted from abroad, income going out of a country, or investment outside our country. Such kind of details can be given to you instead of giving you directly NFI. Depreciation will always be given directly to you in the question. You need not worry on depreciation.
Thank you, ma'am.
Okay, sir. So shall I wind up with this? Make sure you're going through everything.
Ma'am,
PPT.
one more doubt, ma'am.
Yes.
Ma'am, in the second method, income method,
Hmm.
will they give that mixed income, or they'll twist it like some other incomes?
No. Mixed income, they'll give you as it is. Again, another advantage, mixed income, you cannot bifurcate it into any other category. They'll give you mixed income as it is. Some value will be given to you. You need not worry on that.
Okay, thank you.
So go through the PPTs. Here you don't have time. I usually suggest is kindly go through your Macmillan book, kindly go through your IBS study material, and finally, only for the sake of revision, you can depend on your PPT. But now it's high time that you start revising. So kindly go through the PPTs, even especially the Indian economy part. Go through it. It's like I told you, it's just for the sake of mugging up some programs, schemes, and values of our Indian economy. And if you have doubt, definitely please feel free to contact through WhatsApp. Okay. So thank you and all the best for your exam.
Thank you, ma'am. Thank you, ma'am.
லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, கமெண்ட் பண்ணுங்க, மறக்காம நம்ம சேனலை சப்ஸ்கிரைப் பண்ணுங்க.